Now, most traders think just because it's a demand zone, it's a great entry for a trade. Now, let me explain to you why this wasn't the best entry. Yes, you could have gotten a quick scalp, made a couple $100, but the overall trend is bearish. See, when the trend is strong, you want to look for an entry that matches the trend. So in this case, we can see that the bears are in the lead. So taking an entry at a demand zone probably wouldn't be the best trade for you. As you can see here, we also have a volume block. So that's telling you that there's a lot of buyers sitting here. Now, the way demand zones work is it's an area where large institutions have put millions or even billions of dollars worth of orders. Now, when you really think about it, price is going to come down to that area and pick up as much orders as it can. Now, in the event that it goes back up, it's going to have a large reaction because what moves the market? Volume. So now there's a large increase of volume coming in as these orders get filled. Now, because there's millions and billions worth of orders sitting there, price is going to try to come back down to pick up the rest of the orders. So that's why you see supply and demand zones getting tapped and respected multiple times. Now, the more price taps that area, the weaker it gets because it has already picked up majority of those orders. Now, in this case, you can see that we have the bears are in the lead. So that means there's more selling pressure than there is buying pressure. Now, look at this supply zone right here. Every time we hit this area, we sold off. We sold off here, we sold off here, and we sold off here. Now, when we hit this demand zone right here, as you can see, it was created, we had very weak bounces. Now, with the supply zone, we're looking for sellers. So now that you identify that the bears are in the lead, meaning there's more selling pressure than buying pressure, you want to start looking at higher time frames to get an idea of what the overall trend is. And I do that by starting at the daily chart. Looking here at the daily chart, you can see that we rejected our supply zone. In the Trend Fusion algo, you'll also notice that there's a faint line here, which is called a linear regression line. That line is used to tell me if price action is bullish or bearish. So very simply said, if price is above it, it's bullish. If price is below it, it's bearish. Now we can see that price action is currently below this line, and we rejected a recent supply zone. The bears are in the lead, so that's telling me that overall that price action is bearish for the short term. Now we know that gold has been completely rallying, so overall it's bullish, but in a short-term perspective for a day trade, we can see that price action is a bit bearish. Make sure that these zones are stronger than ever. You want to look across different time frames. Now on the 4-hour chart, you can see that we close right on a demand zone right here. We still see that there's a lot of selling pressure. Our algo is telling us that it's a short retest. Now if we jump down to that 65-minute and continue our top-down analysis, you'll notice that there is another supply zone right here. And do the same thing on the 15-minute chart. We have a really big demand zone right here. Now, as we talked about earlier, when a price taps into a zone only one time, it's going to be a really strong area. You can see last time we tapped into the zone and we had a nice bounce. We sold off and we bounced again. Now, one thing that a lot of retail traders mess up on, they think that demand is just a level. It's not, it is a zone. So just because whatever indicator that you're using prints this as the demand zone, it doesn't just mean that there's buy orders sitting there. There can be buy orders down here and there can be buy orders around here. This is a zone, not a level. That's the one thing that took me to the next level when I started to trade supply and demand. I can see that we hit an area where price had a nice bounce and a big reaction, and it bounced all the way to the supply zone where all these sellers were sitting, and we had an aggressive sell-off, right? Same thing here. We push up to the supply zone here, we have sellers. We push up here, we have sellers. So that tells you how strong the selling trend is. Now, although we have a demand here, giving that bears are in the lead, I want to see if price can break through, if the sellers are strong enough to break through here. Now, a lot of traders get confused on how do you pick the right demand zone or how do you pick the right supply zone when there's multiple zones that are being created. If prices only tap that area once and it aligns on multiple time frames, like higher time frames such as the 4-hour, the daily, or the 1 hour, you're going to have a better chance of entering there because there's going to be a lot more orders. Once you see a consistent trend across different time frames, that's already telling you that that trend is very strong and that zone is where a lot of buyers are sitting. So if I was looking for a potential entry, I would look here. This is an area where I saw on the 4-hour, the hourly, and even the daily time frames. Now, if you want to learn exactly how to take this trade, stick around for part 2, and I'll be explaining to you how to enter these trades, where to exit, and what strategy I use. But for now, if you want to try out this algo and get high quality buy and sell signals, and even these automatic supply and demand areas populated on your chart, I dropped a link below for a 7-day free trial. Also, if you have any questions, let me know below. I promise you, I'm just a regular person. I'm going to respond to every comment I see.